Happy Monday once again, everyone. Bryan Devore, Devore Realty Group, Berkshire Hathaway Home Services, California Properties with another Monday market moment. And in this Monday market moment, we're going to look at no end in sight. What does that mean? We'll get to that very shortly. First, let's talk about the very latest stats. Right now, we have 5,124 homes for sale throughout the county. It's an increase of 79 from last week, and that's where it is right there with no end in sight. We seem to see inventory continuing to increase, and we'll talk about why in just a moment, but that's the no end in sight we're talking about. Median list price, $950,000, lower than last week. 49 days is the average days on market for those properties. 2,305 homes are in escrow right now, 2 fewer than last week, with a median list price of $879, no change. Average days on market, 31. Months of inventory, 2.99. That's higher than it was last week. Another sort of no end in sight. It keeps going up. We had a slight dip a couple weeks ago, but it continues to go up towards that 3-month mark. Next week, will it go above 3 months? We'll have to wait and find out. Here's a chart showing total actives and total pendings. You can see the inventory continues to go up. We usually hit our peak in August, maybe September, but we have not hit our peak yet. Perhaps we're going to hit it in November. We'll have to wait and see. How many homes came on the market last week? 745, 23 fewer than last week. So fewer homes came on the market last week than the week before, but inventory is up because homes are staying on the market longer. Median list price, $895,000, higher than the week before. New pendings, 343, 44 fewer homes went pending last week than the week prior. We saw a decrease in the interest rates, which created a slight blip up in the number of homes going into escrow. Rates went up a little bit, and so fewer homes did go into escrow last week. Median list price, $850,000, lower than the ones that went pending the week prior. Average days on market, 27. New pendings listed within the last week, 14. New pendings listed within the last 2 weeks, 120. So 4% of homes are selling in a week or less, 35% in 2 weeks or less. Last week, we saw 308 homes close escrow, 17 fewer than the week before. Median list price, $899, $450, lower than the week before. Median sales price, $912,500, higher than the week before. And once again, we now saw the average or the median sales price higher than the median list price. It had been opposite for a few weeks. Average days on market of those homes that closed escrow, 33, 7 more days. Homes are staying on the market longer. Least expensive sale was in Escondido for $280,000. Point Loma had the most expensive sale, $5,875,000. Here's a chart showing new actives, new pendings, and new closed sales. So we've seen in the last 3 weeks a decrease in the number of homes going on the market week after week, but inventory continues to go up. Again, homes are staying on the market longer. We saw fewer pendings last week than the week prior and fewer closed sales than the week prior. At median list price and median sales price, kind of hovering around the same, but again, we hadn't seen the median sales price higher than the median list price for over a month, and it did happen again. From the Stephen Thomas reports on housing this week, we can see the San Diego County off market year over year. The number of homes that came off the market, whether the listings were canceled or they expired, way above where we had been in the last few years. Look how many more homes came off the market so far this year than last year and the year prior, especially the year prior in 2022 when rates really jumped up. Huge number of homes coming off the market, and yet inventory is still going up. So people are still putting their homes on the market, but a lot of people are taking them off. I have a feeling, and so does Stephen, that over the next few weeks, month and a half, we will see inventory coming down as we get closer to the holidays. Here is the active listings year over year. You can see we are at the highest point in active inventory we have been in a few years. Still way below where we were before COVID, but it's still much higher than the years past. Demand, number of homes that went pending in the last 30 days. We did actually see we have more pendings now than we did a couple years ago and more than last year. So that's encouraging news. If rates keep coming down, that will certainly help decrease some of the inventory. And here's the breakdown. Percentage of current inventory versus percentage of current demand. And right now, 34% of the demand is in housing up to $750,000. 30% of the inventory, however, is that level. So more demand than supply. Same for up to $1 million. It's about the same from 1 million to 1.25 million, and also 1.25 million to 1.5 million. And then it switches with more supply than demand, the higher the priced homes are. That's it for this week's Monday Market Moment. Let's keep track of what's going on here over the next few weeks. I encourage you to stay tuned, stay involved with what's happening in the market, and we'll see what's going on if inventory does, in fact, start coming down, if we have hit our peak. Don't forget to scan the QR code to track your home's value. That's it for this week's Monday Market Moment. Hope you have a great day and a great week. Take care.
Thanks for watching Monday Market Moment with Bryan Devore. To request a transcript of this report, please send an email to Bryan@DevoreRealtyGroup.com.